Hey guys, welcome back to High Yield Intraday Trading. I hope every one of you is doing good. So before we start discussing today's topic, let me request you all to subscribe to my YouTube channel by clicking on the subscribe button here. Once you click on it, you will get the confirmation on the left bottom corner. Post you subscribe to my channel, also make sure to press the bell icon and click on all. You will get the confirmation on the left bottom corner so that whenever I upload a video, you get the notification about the same without any misses. Also, I would request you all to subscribe to my Telegram channel with the name HYIT Intraday Calls because I share a lot of things over there and it might be helpful to you in some way or the other. All right. So if you listen to me carefully, I always try to draw your attention towards a very particular thing when I talk about my entries in the trades that I take. And the thing that I say is I always wait for the pullbacks to happen. Pullbacks are also called as retracements. Okay. So if a stock is going up continuously, I never initiate a long position when it is going up. I wait for the stock to go up. I wait for it to retrace and then post the retracement or post the pullback when the stock starts moving up again. That is the price point when I initiate my long position. The same holds true for a stock when it is going down. Okay, if the stock is going down, I never initiate a short position when it is continuously falling. I wait for it to fall, then I wait for it to retrace back and post the retracement again when it starts falling. That is the exact price point where I initiate my short position. Okay, now that we know that the pullbacks are important, it is also important for us to find the point where the pullback will end, right? Because that's the most important point where you will initiate a long or a short position. And normally we find it out using the help of indicators or oscillators, right? So in this video, I will exclude the indicators and I will consider only the oscillators. Okay, and I'm not gonna talk about a particular oscillator, but I will be talking about two very important misinterpreted wordings that are used when we read the oscillators. And those misinterpreted words are overbought and oversold. It rings the bell, right? Now, the moment we hear overbought, we think of shorting. And the moment we hear oversold, we think of going long. But the question is, does it work practically? When we are trading live, does it work? Okay, that is the main question. So we will find the answer to this very important question in the course of this video. Okay, so as I mentioned earlier, we will consider only oscillators because oscillators are the only technicals that associate themselves with overbought and oversold zones, right? In indicators, we don't have the concept of overbought or oversold. Okay, so let's consider RSI as an example for this video as the oscillator that we are going to talk about. But in general, the same logic will hold good for any other oscillators that works similar to RSI. Okay, the ones that have the overbought and the oversold concepts tagged to them. Okay, so when we talk about RSI, we have two important levels theoretically, and they are 70 and 30, right? And it's being said that when the RSI line breaches the 70 level, it's the overbought area. So we can expect the stock price to fall. And when the RSI line breached the 30 level, it's the oversold area. So we can expect the stock price to move up from there. Now, coming to the practical scenario, I just don't agree to it. Again, please be noted that we are talking with respect to intraday trading only. Okay, so when it comes to day trading, when it comes to intraday trading, I just don't agree to it. Now, having that said, just disagreeing to a particular thing does not solve the purpose, right? If I'm saying that I disagree to this, then I must have a solid logic behind it. And also, we need to have an alternative way of using that particular thing that works in practical terms, right? Now, if we have RSI, if we have an oscillator which is called as RSI, it surely has a purpose, right? And as a trader, you should not blindly go with the theoretical concepts. You need to dig in deeper to see where and in which scenario does it fit in, so that you can use it correctly. And this is the exact point I'm going to discuss next. Okay, so as of now, we have three things: pullbacks, overbought, and oversold, right? Now, in order to make it more practical, we will add another important aspect to these three things, and that would be the trend. It might be an uptrend or it might be an downtrend. Okay, so in total, we have four things now, and in order to trade well, we need to sync these four things and make them work together. Okay, so let me go ahead and explain a scenario here. In day trading, the first thing we need to find is the trend. That's very important, because based on the trend, we will decide whether we should go long or short. So let's say, for example, that the market is in an uptrend. Now, since the market or a particular stock is in an uptrend, we need to wait for it to retrace. Now, when it is retracing, this is where we bring in the RSI oscillator. So the stock retraced and it took support at some point. So the point where it is taking the support, that point should sync with the oversold area of RSI, which means that the RSI line should fall below the 30 mark. And please note that 30 is just a number. It is a default number that is already mentioned in RSI by somebody, the guy who invented it. Okay, so take 30 as just a number, and you can change it according to any number that works well for you. Okay, so this gives you a proper scenario to go long. Okay, so what exactly did we do here? Please note that we are just not looking at the oversold area of RSI, but we are also looking at the support area where the stock is taking a support, and also most importantly the trend, okay, which is a uptrend, which is an uptrend here. So basically, we are combining all the three aspects here, and only when all the three aspects are in sync, we are initiating a long position. I hope you're getting the point. Okay. Now, if the trend of the stock is downtrend, then this entire scenario that I just explained fails. This scenario, which I just explained, is good for the stock which is in an uptrend. Okay, let me do this. Let me take you to the charts here. Let me take you to the chart here. I already have a best case scenario mentioned here. Okay, just to save some time. So this is the Nifty spot chart. It is a 1 day chart. Okay, but as I said, this video is for intraday trading. So you need to apply it on a 5 minutes chart or a 15 minutes chart. Okay, the 1 day chart that you see here is, it's just for an example. Okay, so this is a 1 day chart of Nifty spot. Okay, and just by seeing the charts, you can very easily say that Nifty is in an uptrend, right? Why are we saying that Nifty is in an uptrend? It's very simple. The reason is it is making higher highs and higher lows. So that tells us that Nifty is in an uptrend. Okay. Now, it is not the case that if a particular stock is in an uptrend, it will only give green candles and it will go diagonally up like this, right? No, it will have some retracements here. So this is the retracement. This is a retracement. This is a retracement. This again is a retracement. This is a retracement. This is a retracement. Okay. So if the stock is in an uptrend, we know that it will retrace and then it will take a support and then again it will go up, right? Now, when the stock is retracing, I requested you people to bring in the RSI. Okay, so this is the RSI, the white line that you see here. This is the RSI oscillator with the default value of 14. Okay, so when the stock is retracing here, that is when we need to bring in the RSI. And here, as you can see here, the upper line is the 70 mark, the lower dotted white line is the 30 mark. Okay, so when the stock is retracing, that is the point where you bring in the RSI oscillator and you need to see that it breaches the 30 mark. Okay, so the same thing is happening here, right? It is in an uptrend, then it gave a retracement, and when it was taking a support at this point, right, RSI has breached the 30 mark. Okay, so the next day again it has taken a support. We are getting a green candle here, and then again the Nifty shooted up. Okay, so this is how you need to relate RSI, overbought, and oversold. Okay, and of course the trend. All these four things have to be synced up together, and then you need to make use of it when the market is live. Okay, again, please note that this is a best case scenario that I'm showing here. And again, just to remind you, it is a 1 day time frame. When you switch to lower time frames, you will get more number of points where the RSI is breaching the 30 mark when the stocks are retracing. Okay, so I hope you are getting the point here. Okay, let me get back to the presentation here. Okay, now yeah, so that is what I wanted to explain on the chart. So let me explain this when the stock is in a downtrend as well. Okay, so let's say, for example, that the market is in a downtrend. Okay, now since the market or a particular stock is in a downtrend, we need to wait for it to retrace. Now, when it is retracing, this is where we bring in the RSI oscillator. So the stock retraced and then it faces a resistance at some point. So the point where it is facing the resistance, that point should sync with the overbought area of RSI, which means that the RSI line should be above the 70 mark. And again, just to remind you, it is just a number. Okay, note that 70 is just a number and you can change it according to any number that works well for you. Okay, so this gives you a proper scenario to go short. So again, what exactly did we do here? Please note that we are just not looking at the overbought area here. We are just not looking at the overbought area of RSI, but we are also looking at the resistance area where the stock is facing a resistance, and also, most importantly, the trend, which is a downtrend here. So basically, we are combining all these aspects here, and only when all the aspects are in sync, we are initiating a short position. Okay, I hope you are getting the point. Okay, so bring in the trend first. Okay, just to summarize the things that I have explained before some time. Okay, bring in the trend first, then wait for the required retracement or pullback to happen, then bring in the RSI oscillator, and then relate those moves with the overbought and oversold concept and see the magic. Okay, well, it might be confusing to some people here. Okay, so I would request you to go through the explanation again. And trust me, it's not tough. You need to just come out of the default settings that has been set in our minds, and you should see everything falling in place. Okay, so that's all from my end, guys. And for the guys who have not watched my previous video, I have put in the video card on the top right corner of this video. The I symbol that you see there, you can click on it and watch my previous video. And as always, please sorry, and as always, I would request you all to like and subscribe to my YouTube channel, and also please do not miss the ending of this video, as you might get some more information about HYIT that might be helpful to you in some way or the other. And please feel free to ask your question or queries, if any, in the comment section, and I will surely reply back to them. And also, please do not forget to like this video if you liked it. So that's all from my end, and I will see you all later. Hope you all will stick back. Happy trading and take care of yourselves. Bye bye.